Flights are pricey, planning feels chaotic, and that family trip keeps getting pushed. I hear it every day from business owners and busy professionals, and I felt it too. I'm Ross, the founder of Itinerary Boss and your host. After 10 plus years of planning work and personal trips to over 20 countries, I became the guy who found the deals and turned points into upgrades. This show helps you turn everyday business and personal spend into points and miles for premium travel. Each week, you'll get step by step tactics and short episodes, plus expert guests with specific use cases tied to your most asked questions for travel plans that'll help support your business, goals, and your life. Go ahead and grab the free points and miles cheat sheet in the show notes to speed up your learning. And now, on with the show. Welcome back to another episode of World Travel Made Easy. I'm excited to have Rachel Earl on this week. She is a CPA and also she is a nerd when it comes to points and miles. So I wanted to bring her on. She also was on a show that we recently went on and also had DeAndre Coke come on. So excited to have her here. How's it going, Rachel?
Fine, thank you for having me.
Of course, of course. And I don't want to sell you short, so I'd love to learn a little bit more about you, your background, where you located, and all that good stuff.
So I live on the central coast of California, but I grew up in the LA area, and I grew up traveling. The first time I traveled internationally, I was two. Went to Poland when I was three. So my dad from Poland, my grandparents lived there, and then for a few years we traveled domestically. Did a lot of road trips around the basically the western side of everything west of the Rockies and up to Canada. And then when I was 12, we went back to Poland. So that was like my first real memory of Poland. And we went to London and Paris. I was 14 the first time I traveled on a plane by myself domestically, 16 when I traveled internationally by myself on a plane. Now, granted that I wouldn't recommend all parents to do that. I had people waiting on the other side. I went to Poland to visit my grandparents. I was 18 when I backpacked around Europe, like a few days after I graduated high school with five friends. Went and studied abroad in France when I was 2021, and I've just been traveling as much as I could. And it wasn't until a few years ago I had my first kid, my only kid, and the cost of childcare was this, oh my gosh, I'm never going to be able to travel again. And started looking online, just on, during those late night feeding sessions with my son on Instagram, and saw, I think I was following Ashley Gets Around and saw she had all these points and miles people. And I was like, okay, what is this? And that's when I started finding these people, started binging all the podcasts I could find and learning all I could of like, oh, because I was completely unaware of points and miles. So that's the travel side of it. And then the CPA side of it is, my dad owned a business growing up. And I was like, well, when I go to college, I'll just major in business, and then took my first accounting class. And it was like, this makes perfect sense to me. First took my first tax class, and I was like, yep, this makes sense to me also. And so I went into tax, got my CPA license in 2012. And we're going into my 15th extension season of taxes. So I've been practicing for quite a few years now. So my clients are mostly small businesses and their owners. And so I've kind of been listening to podcasts, and they're like, well, you need to talk to your CPA or your tax preparer. I was like, oh, that's me. Well, what is the answer? I am the one to look this up. I am my CPA. So that's kind of how the worlds kind of have merged.
I love that background story. And it's always cool to hear. And I like to ask that on the front end just to hear because, I mean, obviously you started traveling when you were two and three, which then, that's usually when I'm having guests come on or when people are into travel a lot is they start traveling early on. Similarly, my parents put us on skis when we were really little. We did a lot of domestic travel. We didn't do a ton of international, but I I'm jealous that you got to go backpack with five friends at 18. That was like a dream come true that my mom did after college, and she was big on that. So I luckily did get to study abroad in Ireland, similar, but it is cool to hear that. And just, yeah, daycare. I mean, I have some friends now who are just having their first, second kid, and yeah, it's like another mortgage or rent. So it's
Yeah.
kind of crazy. Or yeah, I mean, I think my wife sent me because I'm originally from Northern Virginia, and she sent me the average cost in Arlington, Virginia, which is the most expensive, is like from daycare until kindergarten. I think it's like almost 150 grand, which is insane.
Yeah, it is, I think it's regulated by each state. So in California, they have a very low teacher to child ratio when they're infants. And so it does get progressively less expensive, but it is like almost the same. I mean, I think at one point it was like, oh, it's $100 less to send our son to daycare and than rent. So
Yeah.
it's like, okay. So like, all right, got to get into those points and miles and figure this out because I can't do this of not traveling like I need to go, especially with the COVID lockdown. I was like, I want to get out. I need to go somewhere.
Yeah,
So
yeah, no, for sure. And we recently had Kelly Halpin. He's the CEO of Mesa. I don't know if you've heard of that card where,
I have, yeah.
yeah, so that's a lot of people are like, oh, I can get three times the points on daycare and I can get one times the points on my mortgage. This sounds great because
Yeah.
those are about the same cost. So I might as well.
Yeah. I'm like, that offsets the 3% fee that I have to pay with credit card as opposed to like an ACH. Yeah. I'm like, so I use specifically childcare. I'm like, this is sign up bonus spending only right now. So
That's awesome. That's awesome. Well, I definitely want to get in because I know you have a ton of knowledge and you're going to bring a ton of value. Obviously, being you mentioned you're going on your 15th extension year, which, a ton of people always ask about taxes, right? Within points and miles and everything like that. So would love just to understand more just about, obviously you got inspired through going on podcast listening, understanding that, right, you're going to be that person to answer those questions. But are there different things that, you feel like there might be a misconception around or questions that you get asked a lot from clients and people that come to you?
I haven't had many clients ask me questions about points and miles. I've gotten it a couple times. One would be, okay, if I redeem my points, is that possible? And this was a business asking it.
Hey, I wanted to take a quick break to say thank you so much for tuning into the show. The only way the show grows is through listeners like you helping us share it. So if you're enjoying the show, it'd mean the world to me if you hit that 5-star rating, shared it with a friend or family member who's ready to travel more, save money, or just needs a little bit more inspiration and that nudge. And if you're posting about it on Instagram, go ahead and tag Itinerary Boss, and we'll make sure to reshare it and shout you out for giving us a shout out. Thanks so much for the support. It truly means a lot. And now back with the show.
And it's like, well, if you redeem those points to offset the credit card bill, then yes, it is taxable in a way because you are now decreasing your expenses, which then increases the net income and increases taxable income. But in terms of if like you're going to turn around and redeem it through the portal, which I know everybody says not to, or transferring it out, no, there is an IRS notice out there from 2003. I want to say it is the early aughts. And so it's been at least 20 years where they're like, no, if you redeem this isn't going to be taxable. So they haven't revisited it in that long. I don't think they're going to anytime soon. So the answer's usually no. I'm never going to say always.
Yeah.
And I would say probably most states are going to comply with that. But for the purposes of this conversation, we'll stick with federal. I might bring up some examples from California, but California does comply. It is notorious for not complying with federal tax law and having all sorts of exceptions.
Yeah.
But for an individual, no, you're not really going to have any tax impact on redeeming those points. I think a lot of other creators will bring up, well, am I going to get in trouble for using my business card for personal purposes? Or how can I get a business card? But I don't have a business and that kind of thing. I mean, to apply, you can always use your social security number. You're probably find a Schedule C for a sole proprietor business, or a Schedule E for a rental, or a Schedule F for a farm type business. The IRS is not keeping track of what card you use. They do not care. They don't have a big database keeping track of your cards. I mean, think about how many people are churning these credit cards. No, like trying to get them on the phone can take a couple hours, and a response just about the tax return can take weeks, or months. I've actually had it for over almost 2 years on one
That's
tax return
crazy.
one time. Yeah, a client was trying to get a refund. And so they're not going to keep track of the cards. What they care about is the expense that you are deducting, is that ordinary and normal in the course of your business? If it's not, and you're like, yeah, my ski trip somewhere is totally business deductible. It's like, no, it probably was personal in nature. There might have been like a lunch you had with somebody So there's rules around travel and what's deductible, but they don't care what card you use. So, and if you use your business card for personal purposes, they don't care as long as those personal uh, expenses are not deducted on the tax return as a business expense. That's what they care about.
Yeah, yeah, and I appreciate you bringing that up, and just because a lot of times I have clients coming to me and they're like, "Yeah, I see this on TikTok or Instagram, and this is what people are saying," and then I'm like, "How do I do this?" And it's just, and I always just say, "Don't believe everything you see on the internet."
Yeah, that's what Abraham Lincoln said, right?
Yeah. But yeah, and I appreciate you clarifying because a lot of people will redeem, they'll get a ton of points and then they'll redeem those as statement credits towards their bill. And then, right, if they're redeeming 100,000 points towards $1,000, like they're then taking that towards, their income. And I think a lot of people don't realize that. And they're like, oh no, it's, from business owner. And sometimes people unfortunately, they'll get either cashback cards that they'll do that with, or they will get cards that don't transfer points. And they think that they're getting a good redemption, but they're kind of getting put in, double jail where they can't transfer the points and they're then redeeming that and they're having those go back towards taxable income. So I appreciate you clarifying that. And then just from a
Yeah.
personal standpoint, yeah, it's just keep it simple and just, be honest, if you're,
Yeah.
because that was one of
Yeah.
my questions when I started a travel company. It's like, hey, if we're going to Costa Rica and I'm shooting content and, it's obviously part of personal, is that tax deductible? And my CPA was like, no, it's, you're going there for personal reasons. So that just made sense. And it was just that's when I learned that a couple years ago. But I think that's very helpful for a lot of people who do have those questions around personal business and getting into the travel space.
Yeah. And there's, the IRS has a whole publication on travel as it relates to business and what is deductible. And they even address, well, what if it's some of it's personal? Like, there's conferences in other states. The tax world, there are conferences in Scottsdale, Hawaii, Florida, where it's a whole week long. So we can get our continuing education credit that we need to renew our licenses. And I'm sure people go, it's like, oh yeah, Hawaii, of course, because I can bring my family and we can spend a couple extra days there and have fun. It's like, that's great. It's not necessarily a problem, but there are rules about what you can deduct and how much. Like you're bringing your family along, their stuff is what they're paying for, their flights, all that stuff. It's not going to be deductible. So the IRS does have rules around that.
Yeah, yeah, no, and that makes complete sense. And just a couple examples, like I'm going to a couple conferences coming up, but they're in Portland, Wichita, which, I'm not bringing, that's not somewhere that I'm going on vacation. It's solely for work. And then another conference,
Yeah.
but it's like you're there just for work. So all of those things are meals, flight, hotels. Sometimes I'd pay with those with points, but I want to get a nice welcome bonus. So I was like, I'll pay for it
Yeah.
with the card. But yeah, that's good to know because yeah, a lot of times when you're going somewhere cool, you want to bring your family and you want to extend that trip, but you got to figure out,
Yeah.
what is deductible, what isn't.
Yeah. And there's, especially with meals, and that's just not even if you're traveling, just regular. If you're going to deduct a meal, or at least a portion of it, because it's 50% is only deductible. You want to keep good records. Why was it business related? Who did you meet with? What date? What did you discuss? So that if the IRS ever came back and audited and started questioning things, you're like, no, this was the reason, and this is why I get to deduct it. So that's always important too. Is just find a way that works for you to keep track of the records like that.
What would you suggest just for someone to like, what would qualify as a record? Obviously a receipt, but say someone, forgets
Keep
to get,
a Yeah, a journal. A journal would work. You have your daily planner that you get at your office supply store. Then you get 5x on, that special ink card. And you can write that in and be like, okay, I did this. And it doesn't have to be super crazy, but one of the expenses that the IRS will go after more is the auto expenses because a lot of people will buy these big cars and then try to deduct me like it's 100% business expense. And it's like, well, keep a mileage log. There are apps for that
yeah,
that you can use. And so I've heard there's been IRS cases also where they had to keep records of there's special rules about being a real estate professional. And they're like, okay, well, we need to see a record of how much time you spent at these rental properties in your real estate. And they could tell everything was written all at once. And it was like, you said you spent 17 hours on Thanksgiving. Doesn't seem right. So I think the big thing is don't do it all at once at the end of the year. Do it as you go. And it doesn't have to be this big, long essay about what
Yeah.
happened at each time, but thing very small. And the receipts are more for your records. Like as a CPA, please don't give me your receipts. I'll ask for specific ones that I need them, but I do not like getting the shoebox that
Yeah, right.
everybody.
That's
Yeah.
funny. No, but I mean, yeah, we invest in real estate, and that was stuff that we looked into from a real estate professional status, and we both were W-2 employees, and it just there was no way with working, and we dove deep into it, into the podcast, right? Just in our network to understand more, and it's like, yeah, you can't if you're a W-2, it's going to be
It's
hard to qualify.
very, yeah, it's very hard because you have to spend at least 750 hours a year, and more than half of your time working has to be in the real estate profession.
Hmm.
So there's a lot of record keeping. I think there was one court case where the guy actually was able to prove because he was I think a firefighter or something. So his days are like he's working like 3 days to get all his like 40 hours a week or something like
Hmm.
that. And then he could work 4 hours or 4 days on the real estate. And it actually did make sense of like, oh no, realistically, you are a real estate professional under these rules. So, and that only comes into play of how much, if you're taking a loss on real estate, of how much a loss you can take each year on your tax return.
Yeah, that sounds exhausting. 3 days firefighter and then trying to
Yeah, I
qualify.
don't. Yeah, something I don't remember the exact details, but something like that was like, oh yeah, this weird work schedule that you have with your W-2 makes it so it works. But yeah, me, there's no way. I'm 8 to 5 and longer during tax season. There's no way. I don't have the energy for that.
I don't even think the juice is worth the squeeze. For
Yeah, yeah.
that's funny. Are there any other just circumstances that you like to caution people on when it comes to points and miles, taxes, personal and business?
I think for specifically businesses where they're keeping a set of books, because I can understand. I mean, I have a few clients where they might have a few transactions a month because like one is a wedding photographer. She's not going to have a whole lot of bank transactions or credit card transactions each month. Well, at that point, I'm like, just use Excel. It's fine. And you can
Yeah.
send it to me. You're having these recurring things and you have a separate set of books. You really want to make sure you're reconciling those credit cards and the banks each month to the statements. And so if you're using a business card that is on the books for personal purposes, those transactions need to go to distributions or some kind of a loan, which if you're going to do a loan, you need to have something set up, an agreement between the entity and yourself. Um, if you're just a Schedule C sole proprietor, it'll be, distributions. Um, so specifically for partnerships and corporations, once you start taking distributions, if you're an S corporation and let me back up. If you're a corporation and there are multiple shareholders, those distributions need to be in proportion to the ownership. If they're not, then you're going to have some accounting issues, and you're either going to have to distribute out more to other people, or you're going to start having a loan. And you need to talk to your tax preparer about that. But the problem comes in if somebody's taking too many distributions. Well, for a C corporation, you're taking those distributions, it's dividends. It's now taxable income to the shareholder as probably an individual. If it's an S corporation and they're taking too many distributions, and you have what's called distributions in excess of basis, you now will have capital gains on your personal return. So your basis is the sum accumulation of all your earnings throughout the year since the corporation began, minus any distributions you've taken throughout time, plus any contributions, money you've put into the company. So if your basis goes to below zero and you're still taking money out, then now you have a capital gain. So that's where there can be an issue. This can happen probably a lot. I've seen it with people who buy equipment in the past few years. They've had bonus depreciation. Maybe they bought that piece of equipment with a loan. So they're not paying out the cash for it, but they've taken the entire. So that's how they were able to take the money out. And so if you're using a credit card to pay for personal expenses, that's you're taking money out of the company. So you have
Hmm.
to be really careful about that. Um, so for partnerships, it does not, those distributions do not have to be in proportion to ownership, but there are still basis issues. And so you still want to be, it's a little bit different, but it's keeping your books separate. So if you're going to take those distributions out and have your company pay for your personal expenses, fine, that's your choice. But now you don't have money in the company to actually run your company. So you
Hmm.
probably want to pay it back. But you can't just skip inputting those transactions into the books because now your records won't balance. And me as a CPA, I can't rely on what you have. And I'm like, I don't even know if this is right. I
Yeah.
had a client recently who used a personal on the bank on the balance sheet. And I was like, well, I don't even know if this is right. And so I had to tell him, like, you can't do this. If instead, you have to put all of them on there or just don't put the credit card on there. And if there's business expenses, then you have to kind of do the accounting a different way to make sure your business stuff gets on there. So I've heard of other like partnerships where they're going to use a personal card or a business card they don't want on the balance sheet. They may pay for, use it and then come at the end and say, okay, I'm going to put the expense on there. And because accounting is double sided, they're going to make a loan or they're going to put it to contributions or just to the equity section as putting money into the company. But I would highly recommend people your business cards stay on the business books, or if it's that one time sign up bonus, just don't put it on the books, fine, but you got to keep really good records about what your expenses or your expenditures are, and what's being deducted and where it went so that you have it everything makes sense at the end of the year. You just have to really keep, and if you can always ask your taxpayer, like, well, what is the journal entry or how do I get it on there? And they can help with that. But you want to keep really good records. That's
So,
the big thing.
so what I'm hearing is keep personal and business separate to keep it
As
simple.
as a CPA, it makes my life way
Yeah.
easier. Now I understand you're like, well, I really want that big sign up bonus as a business card. Maybe you're only doing it for the sign up bonus. You personal expenses can cover it. Yeah, fine, whatever. But if you put something that is business for one transaction, just keep track of it so it can get on the books for the
Yeah.
business. But um, yeah, the accounting and your CPA will love you if you keep it separate.
Yeah, yeah. I mean, I can say for someone who does this personally and with, multiple businesses for real estate as well as itinerary boss, it's like everything's just separate, right? I just keep it where it just that way for me, it's super simple at the end of the year. And
Yeah.
I mean, I want to make, I know how April when April comes around, how long hours you all work. So I try to make
Starts in January.
I that's honestly when I'm trying to get everything over to my
Yeah.
CPA is
Oh, good.
around January, February. That way I'm not stressing and it's
You're
but
gonna have their favorites then.
yeah.
If clients were like, because of the business tax returns are June, September 15th, or yeah, September 15th for extension. And we still haven't heard from some clients. And we're like, okay, are we doing this? And I've gotten to the point of like, if you're not going to bend over backwards, I'm not going to bend over backwards to get it done. Like,
Yeah.
this is on you.
Yeah, yeah, no, for sure. If so, I guess because sometimes you have, partners who, if they start to take distributions and they keep business credit cards separate. Say someone had, say each partner just has, there's two partners, and it's 50-50 split. Is there anything if they say, okay, every quarter, we were using a cashback card, for example, and we were just taking distributions through that. If they then move to a points earning card and they start to earn, millions of points, and then they say, okay, each quarter we're going to take, if it's 1 million points, we're going to split that in half and take 500,000. How does that then align as a distribution if they were to, say they had, we'll just say an ink, and then they transfer that to their personal ultimate rewards account. Each of those had that. And then they decided to transfer those over to partners. Like, how does that, do you kind of help me walk through that?
There's there's no tax impact.
Okay.
The points earned, if you then say, let's say everything's put on one credit card that is in partner ones or even shareholder ones. So for corporations and partnerships, and just so everybody knows, LLCs are a state entity. there is no LLC tax return at the federal level. They will file as partnerships or elect to file as S corporations. So that's in case anybody's wondering. That's why I'm not addressing them. They fall under the partnership for this. So those points earned, if it's all in one card and it's in one partner's name or one shareholder's name, uh, they take all those points and they transfer them out to their partners, because it's, as far as I understand, because I haven't done this myself personally, the points earned will be in that person's account that opened the card, that it's associated
Hmm.
with that person's card name. Um, so if they want to transfer like 50% to the other 50% owner, they can do that. There's no tax impact. Any transferring points out anywhere, there's no tax impact whatsoever. Where this actually happened, from what I heard from a partnership that I'd heard of, one partner, I think there might have been four partners in the ownership, decided to redeem all these Amex points. And people found out later, it's like, well, 25% of that was mine.
Hmm.
But there's no really, like, I don't know if there's any legal recourse to that, but there's no tax recourse. There's no accounting recourse for that because you're not accounting for the points on the books in any way. So really, if anybody's going to want to share those points, you're going to probably want it in that partnership or agreement, or the shareholder, the corporate, I'm blanking on the name, but the formation of how the corporation is going to run. You have, it's a legal document.
Yeah.
So it's like, okay, we're going to transfer, and this is all going to be split evenly or based on proportion, or whatever it is. Otherwise, you could get into just have bad blood between those owners, and it can
Hmm.
make working really hard.
Yeah.
So, but there's no tax ramifications if somebody's like, no, I'm taking 100%.
Yeah. Yeah. No, I
And
mean,
there's no,
that's
yeah, there's no accounting, no journal entries to do or anything like that.
because I get asked that because people that I work with sometimes have two, three owners, and I want to make sure, right? Like, their goal when they first start is, hey, we're spending all this money. Like, we want to be, we want to benefit from it. And, we'd like to take whether that's a quarterly retreat, whether that's an annual retreat, like we're all friends. Like, we want to do that. So for me, it's like, okay, setting them up for success right off the bat and saying, this is the strategies that you can use within, said bank's portal, and this is what they allow. But from a tax perspective, just having them understand that, because yeah, sometimes people will either be like in one of our partnerships, we have an LLC, which we've done it where we've split it 50-50. It's super simple at the end of the year, and we're not. I mean, these are very just, this is, smaller real estate. But you have other people who are spending a lot more and they have, millions of points. So it's just making sure there's transparency there and helping them out. And yeah, some are LLCs, some are S corps, some are starting to move into C corps. So I think, yeah, just understanding that piece was helpful. And
Yeah.
if there's anything from if someone's because I know a lot of the times people will say, hey, if you're in an LLC and you start to get to a certain level of revenue, maybe move to an S corp from a tax perspective. Is there any changes just around um, points and taxes there, or is it just going to be the exact same?
Your state is going to vary. No, there's not going to be a difference from points and miles, but
Okay.
like in terms of the revenue of like a fee you have to pay or something, that's going to vary by state. California, they tax corporate income, or S corporation income at 1.5%, $800 minimum. Uh, LLCs, same thing, $800 minimum, but you're not going to be taxed on net income. Instead, it's a gross receipts fee, depending on how much it is. So if it's over, like, the highest fee is 11,700, I think. Yeah.
Okay.
And that's for like millions of dollars of gross receipts. I don't remember exactly how much, but it's like a stepped, it's not a percentage. And it starts at $900, but that's at once they reach $250,000 of gross receipts. So determining, like, well, does it make sense to make an S election or not? That's, you're going to have to compare your net income to your gross receipts and how it's going to be affected each year. And you'd have to look at the state and how many states you're filing in.
Okay.
Um, yeah.
Okay. Okay. That's helpful. That is very helpful. I love diving deep into this stuff. This is from a tax perspective. Like I feel like not a lot of people do. I'm just when I found out when I was a W-2 in sales and high income earner, like when I had to write my first big check, that's exactly why we started investing in real
No.
estate because I was just like, there's no way. How can I have less taxable income? And that was one way. But
Yeah.
that's why I really nerd out on this stuff and like to go down, and especially working with business owners. Like I think we talked about this before we got on, but they have questions around, if they are already sold on credit cards and they're not like, hey, credit cards are terrible. Then their next question is, okay, taxes. What about that? So that's exactly why I wanted to dive into this for a lot of my clients.
Yeah, and it's I mean, there's also just wanting to keep your life simple as an owner. There are a lot of owners who are gonna for small businesses, they're doing their own accounting. And do they want to spend the time and the effort to be switching over the credit cards all the time and updating the books or informing their bookkeeper or accountant on how to do it? That can be a lot of extra time. You're like, is it worth it? I don't know. That's up to you. But it's I think a lot of the hidden costs of time and labor that probably most people don't think about.
Yeah. Yeah. No, absolutely. I mean, when I'm working with people, I try to at least set them up for success and align, right? Hey, here's your P&L, and this is where this goes. This earns this times points. And then from there, don't change anything, right? And code it right from
Yeah.
the get-go. And then that way, you're earning and just, yeah, I think QuickBooks, that's what we use. A lot of people use that, and
Yeah.
like tracking when you're going to events or you're traveling. I mean, there's something within QuickBooks that you can use that automatically tracks it. Everlance is another one that we used for years before we just moved into using that. So it makes it easy, and it's like you said, it's like just keep your life simple and then help
Yeah.
people like Rachel keep her life simple.
Yeah. Yes, thank you. I'm like, there's too much going on in tax season. I don't want to deal with everybody's shenanigans. Um, there's other like shenanigans going on. I'm like, oh gosh. But the like one thing for more some of the more premium cards that have annual fees, those are deductible. You can code it as credit card expenses on your P&L. It's not a big deal. We deduct it. It's like a bank fee. It's not. There's no problems there. One thing though, for like W-2 employees, this is something kind of interesting. Um, like I have the uh, Amex Gold personal card. And one of those months I had to go up to Salt Lake City for work and used an Uber credit to go that was to go to the hotel where I was staying. And I got like the $10 back. Well, when I got refunded, I didn't refund for the total amount of the Uber. I was minus the $10 of the credit I got because that's what it cost me. Now, I know a lot of people in the points and miles world are going to say, well, yeah, but the fee offsets that. You know, the IRS isn't going to see it that way.
Yeah.
They're going to be like, that's a separate thing. That's a separate transaction. So I did it for the net. Otherwise, if they're paying me $10 that I've gotten a rebate from, that $10 is technically taxable income to me as a W-2 employee, and I'd have to report it on my tax return.
Ah, very interesting. Okay. Yeah,
Yeah.
because I definitely, I mean, now with some of the premium cards, now I'm moving to like couponing, and you got to remember, okay, this is what I get. Luckily, like I just got one of the more premium for one of our businesses, and I'm like, okay, I have a high this. I also have all these different credits, and I'm like, do I even like want to put in the mental gymnastics to use it, or,
Yeah.
or,
I was like,
or
well, it's up to you.
yeah, no, or is Centurion Lounge access just worth it? Like that's
Yeah.
that's where my head goes. Since we're on, one other question before because I do want to get into W-2
Yeah.
employees and side hustlers because I think that's very important. And I did that for a number of years, but from a business owner standpoint, a lot of real estate investors sometimes will not pay. They have a lot of contractors. And then they're just paying vendors who charge a 3% fee. So is that when you pay for that with a credit card, can you then deduct that, say it's $1,000 for that 3% fee? Is that tax deductible?
Yes. So what you're probably going to see as a charge is $1,030.
Hmm.
If I can do math in my head. I
Yeah,
know the accountant. I use a calculator, usually
yeah.
Excel. Yeah, that's so. Let's say you buy a piece of equipment for so the de minimis for the IRS is $2,500. So let's assume the equipment's $5,000, and you pay 3% on top of that. That becomes your basis in the equipment that you're now going to depreciate. If you're just buying supplies and it's extra, 3% or something, well, that's just that's the cost of the supplies. So it just goes into that cost of what you do. You don't have to separate it out in your transactions of, oh, 3% was my bank fee or my transaction fee in this, because you're going to be charged that, but you're not necessarily going to see it on as a separate line item charge on the credit card or the bank statement. You're just essentially reimbursing the cost
Hmm.
to the vendor that you paid for. So it's not a big deal to do that. I think, like, if you're going to be, a lot of people will be like, well, the taxes that you pay online, um, you're not going to be able to deduct the 3%. I mean, you might if it's like a business tax that you're paying, but your personal taxes,
Okay.
no, because those are non-deductible anyway. So you're not going to get to deduct a fee for a non-deductible expense.
Yeah, I have a property tax that we have to pay for some land that we own, and each year I'm just like, all right, well, do I get a new sign up bonus, or do I just use my two times the points earning card? It just depends on where
Yeah.
I'm at and what I've applied for.
Yeah. And I have some clients, their business is doing very, very well. So their estimated tax payments they're making each year are three or six figures and more,
Yeah,
and multi six figures. And at that point, I'm like, well, I don't even know that you're going to get a spending limit high on the credit card anyway. So it's going to be, does it really make sense? Because now the fee is so expensive. It's like, let's
yeah,
just pay with cash. Go
yeah,
online and just do the ACH.
yeah,
Um,
yeah, for sure. Unless you don't have one of those, no preset spending limit ones, and you're getting a new one that's getting a welcome offer that, you're not just
yeah.
getting one times the points on. That's
I maybe like I'm talking, I mean, I have one client in specific where I know his quarterly estimates are more than my salary. Like, and I'm sorry, more than our household income,
yeah.
with me and
Wow.
my husband. And I'm like, yeah, I'd pay that with cash. I wouldn't bother with the extra things, especially because his business is gonna have if he were to do this, would have so much spend anyways. It's like I think he'd be one person where he has more points than he knows what to do with,
Yeah.
you
Yeah. No,
know?
for sure. And it gets to I mean, there's some people that I work with that, yeah, they're spending, millions a year. And it's like, okay, when it gets to a certain level, like that's what you guys are doing now. That's great. But you might get to a point where it's like you have too many points to spend. It may make
Yeah.
sense to, do you start to use different strategies? So yeah,
That that Yeah, at that point, that probably person would not be chasing after sign-up bonuses. Like,
no.
I have enough natural spend, and it's like, why? And, at that point, I mean, it's like, you just start gifting those points away if you wanted.
Yeah, exactly. It's like, hey, are there people that want to fly here? Does anyone, right? Do you want to take
Yeah.
your team on trips and stuff like that? So
Yeah.
no, that's really helpful. I appreciate you, sharing and going deep into that. Just around people who have a side hustle, they're W-2 employees. I did that for a number of years. And you mentioned this earlier, but there's a misconception that, oh, I have to have this massive revenue generating company. Um, does that person, like, how do they, if they go to get a business card, can they apply if they don't have an LLC? And also, what if they're just getting started and, they don't have any income, or they're just minor expenses?
Yeah, I mean, you go on and you apply, you say you're a sole proprietor for a business card, and you put in your Social Security number. You're not putting in an employer identification number that is the tax identification number for businesses that have been formally, um, uh, formed. Um, so the application will ask, what is your business revenue? And you can give it an estimate. And then it'll ask for the household. And so that's probably going to be a lot higher. So you're going to include your W-2, your interest, your dividends, and all that stuff. And then it'll ask, well, what do you expect your monthly expenses to be? And you could put in that. I mean, I've done it with like, oh yeah, $5,000 revenue from the business and then like $1,000 of expenses. Well, that nets out to a loss. Like, let's do the
Mhm.
math. 5,000 minus $12,000 expensive. No, I don't net a loss on like my side hustle, but I'm like, oh, this is fine. And it's probably just gonna be a lower limit, but I've gotten the cards. It's not a big deal. The IRS doesn't have some big database of all the cards that everybody has. I mean, they're just trying to keep track of one income tax return
Yep.
per filer every year, let alone the multiple cards that people have, they open and they close and everything. I'm pretty sure there's probably some kind of law out there about what the banks can share with, the IRS on that. And that seems like too much of an effort. The IRS has bigger fish to fry. They don't have the funding to be able to do that. They're just trying to get a lot of the really old systems that are decades old computers updated at this point. They're not worried about your credit cards. They've got
Like
other
you said,
stuff going
yeah,
on.
like you said on the front end, we had one client, it took 2 years to get a return. So it sounds like it's,
Yeah. Yeah, there was an issue with her return that so she had to paper file, and that's one of the reasons. It was also during COVID, so there's a lot going
yeah,
on with PPP loans and ERTC and all these other legislation that came through. It was like, oh, this is more of a priority from the IRS. So,
gotcha, gotcha.
mhm.
Well, is there any other kind of, I guess, crazy things that you've seen people try to do with cards around taxes, whether it's personal or business, that you'd be like, hey, just make sure you don't do this?
um, I no, I mean the big thing is making sure everything you keep your records and you're reconciling your accounts. There was a court case that I came across a little while that was interesting. So I'm going to try to remember the details. Um, the a couple went and used their credit cards to um, rack up points. You know, as they do the spend. They use those points to redeem at a store for uh, gift cards,
Hmm.
then use those gift cards to purchase wire transfers. So then those wire transfers went into their bank account. So it was a roundabout cash into their account way without having it be as taxable income. The IRS said this is taxable income to you, and it went to tax court and it ruled in the favor of the taxpayers and said no, because they redeemed it for a credit for a gift card in which they could go get anything they wanted for it. If they had gone from points to wire transfer, then it would have been taxable income to them somehow. And I don't remember the exact details, but it was the way they did it when you can buy anything with a gift card.
Hmm.
And so, I mean, one, it was over 2 tax years, I think. And one of them was going to be, oh, you're going to have to claim an additional like $270,000 of income. So it was a
Wow.
significant amount. But somehow they got out of it. So,
That's
but
crazy.
normally, like, yeah, because it's like normally redeeming your card or your points, you're transferring it to a transfer partner. The IRS is relying on what the bank reports as taxable income. Oh, I think that's maybe the IRS had or the bank had reported income to them somehow, and that's why it was on the radar. Um, but when those points that you have, the IRS is relying on what the bank reports to them on a 1099 as income. So when you transfer your points out, well, the first question would be, how would it be valued? This is why it's normally not taxable. Is okay, is it valued at 1 cent per point? Well, what if it's different? I mean, there's people out there like, we value such and such a type of point at this many cents per point. You're going to have to figure that out. What if there's a transfer bonus? Okay, well, now it's a different amount that you're going to have to do. And then is it going to be based on the purchase price of the cash price at the time that you purchased it? Is it, what if you're going to wait till you actually take the flight or you actually use the hotel room? Like there's so many factors where it would be so difficult to value that amount that I think that's the big reason they're like, yeah, we're just not gonna do it.
Yeah. That
um, yeah.
you break it down so I mean you make it simple of like, yeah, this is hard and how could you, right? Like you said, it's like how are you going to keep up with all of that? Not only like what credit cards you have, but then every single person that's doing it, like how like yeah, now when you put
Yep.
it like that, that makes complete sense.
And then you add the extra layer of, okay, now you have a CPA who knows taxes really well. Like, great, good for them. But they may not put points and miles. And they're like, wait, you did what? How are we? Do we value it differently? I don't, what is going on? And so, yeah. And I mean, and also they will start preparing these 1099s in January. They're due by the end of January each year. There's not a lot of time to get all the valuation out. So it makes it more complicated. But like where the points in earning them would be taxable as if referral bonuses.
Hmm.
Um, Now that's reported on a form 1099 miscellaneous, the MISC. Let's see, I think it's through 2025. It's going to be $600 or more. With the recent 2025 Act that passed, they're upping that, I think, to $2,500 minimum. And then it's adjusted for inflation. I think that starts in 2026. Now, most of those bonuses max out, or most of those referral bonuses max out. I'm not sure how each bank is valuing them, but it's probably going to be less than that. They are taxable, but you're probably not going to receive a 1099 miscellaneous.
Yeah, a lot of them I
Um,
think max out around 100. So it depends on what type of card you have, but I think like the more
yeah,
premium ones are usually 100. Sometimes others are 50.
yeah. So there's kind of that of like I'm not sure how each bank is if they might just do it as like 1 cent per point, and so
Yeah,
you get 100,000 points, that's $1,000, and that's your income. And
gotcha.
then like if anybody's signing up for bank bonuses, you so much in direct deposits over a certain amount of time, that's going to be, and you get $350. That's going
Mhm.
to be interest income to you.
Good to
So
know. Yeah,
yeah,
because a lot of the times it's like, oh, get this card, but also then sign up if you're a business client, sign up for $900 if you direct deposit this. So that's
yeah,
good to know that you get, you would get taxed for interest income there too.
yeah. Now, I mean, some people are like, oh, I don't want it because it's taxed. Your tax rate is not 100%. So you are still going to get more cash than if you didn't do it. I'm
Yeah.
not discouraging. It's just like, just be aware because you won't have withholding on that. And so you may have to pay because the withholding or the estimated tax payments you make weren't up to be enough to meet that tax liability. That's all.
Okay. Okay.
And
And
then
I got,
also like with making estimated tax payments is you want to make sure you're making enough because you can have underpayment penalties and interest for not paying in enough. So it's based on your prior year or your current year level of income. And so if you're paying in what you think you owe, but it's not enough and you're paying that 3% and you have penalties on top of that, now you're paying more. So it's just something to be aware of. And you talk to your tax preparer about making sure you are paying in enough. And if there's been significant changes in income, you can talk to them about planning and they can make adjustments as necessary. We do it all
okay.
the time.
Okay. Okay. That's good to know. What about, so now we have, we've had built around earning points on rent. Now we have Mesa where you can you'll earn points on your mortgage, as well as you're going to, they're a mortgage broker that's licensed in some states, and you can earn up to a certain amount on your actual loan. Is anything like that going to be taxable when you're earning points on those? No.
No, not that it's the same thing. I mean, you
Ah.
just whatever you're spending the money on. That I would just be careful of in terms of if you have your primary home, the mortgage principal balance is limited, and
Mhm.
this varies for federal and then state. So federal is if it's before December 16th, 2018, I think 2017. Your mortgage principal balance for your personal home is limited to $1 million. Either up to two homes, so combined $1 million. If you acquired it after, you're limited to $750,000 of your principal. States depends on how they comply. California does not, so it's $1 million plus $100,000 of a home equity line of credit. There's rules around that. So if you're paying with a credit card, Mesa, obviously you can deduct it, but if you're paying with anything where you have these fees on top of it
Mhm.
and you're not able to deduct all of the interest expense, like it's costing you more than I think you realize. So
Yeah.
it's just something to keep in mind.
Okay.
Um, I
Okay.
don't know of Mesa having any fees like that, but
I'm not aware. I just had Kelly come on and he did not say. And from what I've read and looked into and everything I've, just heard, there aren't. So
mhm.
it's,
Okay.
it's interesting, but I like to ask because, there's people who I built came out after we rented. So, and we had bought a home. So I've been kind of waiting for a card that earned points on your mortgage. So I'm
Yeah,
excited
makes
for
sense.
this. And then I know Built hopefully is going to come out with something, that might be a little similar. Because I know Mesa right now is just for your primary, not for anything outside of that. So it'll be interesting. And that's what a lot of people, just real estate investors, people who own homes are always asking. And I think the people are definitely excited for this. So, but
Yeah.
would love
And
to
those and
hear.
those
Oh, go ahead.
Yeah, so those limitations are not for rental. That's just your personal residences. So it's up to two. The reason it's two is what I heard is because people in Congress have their home at home, and then they might have a home in DC also. So that's why they show
Yeah.
two.
Okay. Okay.
That's
Yeah.
what
So
I've heard.
they definitely made that for themselves.
Yeah, they wrote the law for themselves. So if you have a vacation home, it qualifies also. So.
Nice. Okay. Good to know. Good to know. Just
Mhm.
from your standpoint, any systems or like when people are getting started out, whether I mean, obviously, if you have a simple tax, you're in your W-2 and that's all you have, it's easy. But if you start to have other businesses, real estate investments, just anything that's going to be a little more complex, Are there any systems, technology you recommend for your clients?
QuickBooks is going to be the simplest and easiest ones. There's desktop. Actually, I don't even know if they sell desktop anymore. I know they're phasing into more QuickBooks Online. Um, for my purposes, how I use it, I don't like the interface quite as much because on the desktop I can have multiple windows and I have to go through each screen online. But in either one, you can have all the document or all the transactions import automatically from the bank. You have to go through and approve it to get it into your general ledger and your see it on your P&L and your balance sheet. But that's a nice simple one to start off with. But you can always use Excel. Keeping track of it that if you don't have a lot of transactions. So years ago, my husband used to be a wine driver since we live in wine country, and he would drive other people's cars to take them to the wineries. And that was once a week, so 4, maybe 5 times a month. And I'm like, okay, this is the cash in. Like, great, it's simple. I'm not going to pay for a monthly subscription to an accounting software. So I think it depends on kind of the scope of the transactions and everything that's going on will kind of determine. But usually, if you're going to use keep it simple to Excel, is you want the date, probably the name of the vendor or the name of the customer, what would just a brief description, what happened, and the amount, increasing or decreasing your cash, and then each month, or even the credit card, probably a different tab for each credit card and each bank account, and then you can go through and add it, and a description, and then like an account number. So you're like, this is revenue, this is office expense, so that you can easily sum up each one to be like, oh, my total office expense across bank accounts and credit cards is X amount. And
Yeah,
then you can easily formulate it into a P&L.
nice.
Um,
Yeah,
yeah.
last year I didn't have a ton of expenses, more startup costs, and used Excel. ChatGPT is great now because it'll reformat it for you. But
Oh,
yeah, so you can reformat into columns, rows, all that stuff, just prompt it. But now, yeah, use QuickBooks and it just makes life a lot easier.
yeah. I've heard of people using, so like for our personal stuff, we use YNAB,
Okay.
and some people use an instance for their business in YNAB. So they can have everything import and they have their revenue and their expenses in there, which I think is great.
Awesome. Awesome. Well, Rachel, this has been great. Where can our listeners
Yeah.
find you if they want to learn more about taxes, if they want someone who is well versed in the points and miles space?
Yeah, I'm not really online. I am attempting, but with a toddler and my time limitations, it's been very hard to start a YouTube channel just to educate people. So like maybe that'll come out, but it's under Viatorem Tax, Viachorem tax. But yeah, I'm not really online. I
No,
gotta
that's
keep my life
fine. Yeah,
pretty,
no,
pretty private.
no, I get it. It's a that's a whole nother job to create social media content. So I
Yeah,
appreciate you coming on. We'll make sure
you're
to
welcome.
share links to where people can find you in the show notes. And for our listeners, if this is your first time, make sure you give us a follow or subscribe. That way you don't miss out on any upcoming episodes. Share it with a family or friend if they're wanting to learn more about taxes, especially from this episode. And make sure you give us a 5-star review. I think Rachel deserves one. I learned a ton, and I hope you did. We will see you all next week. Thanks again, Rachel.
You're welcome. Bye.